Money and metals for the week ending April 24th. Well, in the money news, Forex. Dollar dips, euro rises as Greek fears fade. The US dollar fell against most major currencies, with the euro rising on fears of the Greek default subsided. The euro, which has been sliding for months on massive bond buying programs and anxieties over the Greek possibility of defaulting, rose against the dollar last week despite weaker than forecast Eurozone private sector business growth. Maybe there's a glimmer of hope the Greek situation may be resolved, said Mark Chandler, global head of currency strategies at Brown Brothers Harriman. And he also said this would support the euro. It's hard to get excited about the dollar uptrend resuming or the dollar breaking down, Chandler said. We won't really get much of a breakout until we see the next jobs data report. Weakening global demand for commodities and a slowdown in China have undermined the outlook for New Zealand, which was the first developed economy to raise interest rates since the 2008 financial crisis. In other currency news, U.S. lawmakers push currency rules for trade deals. U.S. lawmakers were pressed to punish currency manipulators in legislation which is key to closing the Pacific Trade Pact. Democrats on the House of Representatives Ways and Means Committee have offered changes to toughen currency rules in a bill designed to streamline the passage of this trade deal through Congress, according to a document seen by Reuters. A list of Democratic amendments include a goal of directing trading partners to avoid manipulating currencies, but leaves the Obama administration discretion on how to achieve this goal. The fast-track bill cleared its first hurdle in the U.S. Congress after a Senate committee backed a package of trade measures, including a compromise on currency rules. Fast-track would prohibit Congress from amending trade deals, instead allowing for just up or down votes, and this is vital to closing the Trans-Pacific Partnership, an agreement that would link dozens of economies and cover a third of global trade. The U.S. Treasury has warned that tough currency rules would alienate trading partners and could derail the whole deal, which is close to completion. My, we must have our currency manipulators, mustn't we? Gold was stuck below $1,200 an ounce, following the biggest drop in over a month, as strong U.S. housing data stroked expectations the Federal Reserve would raise interest rates soon. Bullion took a hit after data showed U.S. homing resales surged to their highest level in 18 months in March. The data prompted many to think the Fed could raise interest rates as early as June, a move that could put a dent in the gold market as gold pays no interest. Greece has scraped together enough cash to meet its current payment obligation and has delayed that next payment to the June time frame as well. China's factory activity contracted at its fastest pace in a year in April, a private survey showed, suggesting economic conditions are still deteriorating in China. And of course, gains in the equity markets are also dampening the gold price. In silver news, silver stockpiles in China surged this year. Inventory monitored by the Shanghai Futures Exchange almost tripled to 341.5 metric tons as of April 9th, the highest in a year, from about 122.8 tons in the final week of 2014, according to a weekly Bourse data compiled by Bloomberg. Chinese silver producers delivered the metal to the exchange warehouses amid falling physical demand, said Ying Yangzhu, a senior precious metals analyst at Beijing's Anatake Information Development Company. China's economy expanded at its weakest pace since the 2009 final quarter, indicating some slowdown. Tightened scrutiny by the Chinese customs authorities since late last year probably helped close the loophole, contributing to the surge in local stockpiles, according to Chen Min, a Sichuan-based analyst in the Gerard Futures Company. And that's a wrap for this week in Money and Metals.